Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, April 30th, 2010. This morning we're talking about not good enough. U.S. GDP figures came in this morning at 3.2% annualized, just missing analyst expectations of 3.3%. So while there's mild disappointment on this miss, I should note that at this point in the global economy, the fact that we do have positive growth is really a good thing. So a lot of this advance in GDP came from personal consumption numbers, basically spending, which is a good thing because it's showing that a consumer broad-based recovery may be taking place here in the U.S. So I just wanted to take a look here. We did the video a little bit later this morning, so I just wanted to watch for the consumer confidence figures that were coming out in the U.S., which came out at 9:55. And as you can see here, we're just looking at a chart of the Aussie USD, which is a proxy for risk if you think about it, because the low-yielding U.S. dollar and the higher-yielding Aussie. So, we can use that as a proxy for risk. Just if you want to, get an idea of where risk appetite is, you can look at this pair, and I'll show you. So if you see here at 9:55, consumer confidence figures came out, and boom, Aussie tanks, dollar strength means that, these numbers were probably pretty bad, right? Well, actually, the numbers were pretty good. The numbers came in better than expected. I'm not certain what the market was looking for here, but it just goes to show you that, things can change very quickly in the Forex market, and that it really pays to be nimble and kind of keep an eye on what's going on. So just take a look around at some of these currencies. The Aussie is currently higher against the U.S. dollar and against the yen on risk-taking, but it looks like that may be turning around today. Stock markets are down, commodities are down here in the U.S., and it was based, I guess, upon that GDP figure. But the big news we're talking about is Euro USD. Now, you can see the same move happened. The Euro was higher. Let's just take a look at this on the 4-hour chart here for you. So you can see the Euro was higher. They're hoping that they're going to be able to come up with some sort of bailout here for Greece. Now, Greece has agreed to austerity measures, which is going to help trigger loans from Germany, from the IMF, and now actually the German private sector is getting involved as well. So it looks like they may be able to put something together. That's why folks are positive on the euro today, going into the weekend. If we get any news, it's bound to be positive, not negative. The negative's already been priced in. We know what's happening. But on another note, just to show you, Spain just officially reported unemployment of over 20%. I mean, that's just a mind-boggling figure if you think about it. So, while we may get past this Greek situation, there's probably some other ones lurking out there, and I don't think the euro's finished just yet. The other one I wanted to look at here was, let's take a look at the Kiwi real quick. Kiwi's higher, risk-taking, obviously, but the language changed in their policy speech the other day. The RBNZ Governor Bollard came out, and he didn't take, or he didn't rule out the fact that they could have a rate hike earlier than what the market was expecting in July. So possibility for a rate hike in June, depending upon the economic data. And actually, Canada just did the opposite. Bank of Canada Governor Carney came out and he said that nothing was certain, and that they may not hike rates depending. So their GDP came in Canada, came in as expected. Things are going along there. They may be taking a wait and see approach. So as you can see here, we're looking at the Kiwi versus the loonie, and Kiwi's much higher based on just those two changes of languages and speech. So that's what's happening in the market today. Going into the weekend, Japan, yen's weaker on risk-taking carry trades, but again, that looks like that's reversing as well. And you also had, reports come out that deflation is still pretty high in Japan. Prices have fallen for 13 straight months, but the good news is that consumer spending and wages have picked up. So hopefully, they'll be able to combat that deflation in some way. So, there are some good economic figures popping up around the globe, but the major problem is global debt that's out there. Greece is right in the headlines right now because of their tremendous debt, but there are other countries that have just as big a debt, maybe even worse problems. The UK, for example, the United States, and the debt in Japan is so large, people don't even talk about it anymore as a percentage of GDP. That's why the yen is, where it is. Interest rates are so low. So that's what you see. So, there's obvious conflict here for, bank governors and politicians and government people trying to grow the economy and also scale back on debt. So, how this is going to play out is really anyone's guess. But that's what we're seeing today. We're going to continue to see these risk themes play out in the market. So just keep your trading nimble. Have a nice weekend and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.